G'day guys, and welcome to the weekly VEMA Trader Bitcoin market scan. My name is Rhys, and in today's video I'm going to be running you through my thoughts on Bitcoin. Now usually we take a look at the trades that we set up last week, but last week there was nothing that I like the look of, so we're just going to get stuck straight into Bitcoin. A lot of you have been asking for an immediate entry feature, and it's something that we have in our roadmap to build this quarter, but I'm actually going to show you guys a quick little hack on how you can do that in VEMA as it stands today, because Bitcoin's currently doing something that I really wanted to see, so I need an immediate entry. So what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so here we are on the weeklies, and there is not a whole lot to report. We are still sitting on that sort of $17,000, $18,000 demand zone. There is still, the $28,000 supply zone above us. Those are the two key zones because they're the ones that are closest to where price currently is. What does concern me a little bit is the candlestick formation. So you'll often hear me say that consolidation above support is typically a bearish pattern, and that's what we're doing. We are consolidating on that support. We're really not seeing buyers step in and push us up. We are really sort of just sitting in a little range. The candle that we had last week is technically bullish. Price did close higher than it opened, but there's a fair wick to the upside as well. So that's, it shows that price got pushed up and then there was a fair bit of selling pressure to push it back down. So not the most bullish candle I've ever seen. And that sort of has me thinking, okay, if things don't change soon, if we don't see buyers step in, there's a good chance that this demand zone gets eaten and we just walk back down to, possibly 10K. That's the next level I'm looking at on the weeklies. One thing to make a case for the bulls is that we currently have really strong bullish divergence on the CCI. So you can see that from about, where is that point? About there. That low to that low, price has made a lower low, it's come down, but the oscillator has made a higher low. So that's bullish divergence. So that is a sign that we might see a reversal, sometime soon. And just in terms of, markets moving in waves, I do, I think I say this every week lately, but I do kind of expect to see some upside at some point. It's unlikely the market just continues straight down. It definitely can, but a reversal up to here would not surprise me. But honestly, if I had to pick one for this week, the downside is feeling more likely to me just because of the candlestick formation. So bit of a coin flip, but still leaning towards the downside on the weekly, and certainly my weekly bias is definitely still bearish. Nothing's changed there. On the dailies, we are still being held by that supply zone that I was speaking about last week. So you can see we've rejected quite nicely off that here. Pushed into it a little bit, but got that rejection. It's kind of in what I call an elongated evening star. So you can see, even though it's not a 3 candle pattern, it's a 4 candle pattern, but it's the same idea. We've got a bullish engulfing, we've got 2 dojis, bit of indecision, and then we've had a bearish engulfing. Not the strongest one, and it's certainly not making me scream super bearish, but not a great sign for the bulls. What there is for the bulls though is a couple of things. Normally I do like to use a line chart to draw my trend lines, but it's going to be an awful trend line if I do. It's more of a horizontal, which is still a valid thing for sure. But at the moment, I'll probably draw it as more of a bit of a line of best fit, looking something like that. So we did form. That's probably a 4-hour high low to me, to be honest. But there is potentially some sort of a formation starting to appear here. What actually sort of gets me more excited for the bulls is a big if. There's still a lot that needs to happen for it to look that way, but we are in a range, right? We are in a bit of a range at the moment, and so I am potentially expecting to see a Wyckoff range form. If that does happen, what I think it's important to consider is that there is potentially a lot of stop losses here, right? A lot of people buying off these levels, so a lot of stops coming in. There's also a zone. I really like this zone here at about 15,600 to I think about 15,000, 14.8. I feel like that's a perfect setup if we do range for a spring, which if anyone doesn't know, a spring is the same sort of thing as a stop hunt or a liquidity grab or those sorts of things. It's if we have this range build here and there's a lot of buys through there, a lot of stops through there, you could see a spring like that where it pushes price down, stops all those people out, institutions get all their buys filled, and then we bounce up. And I think that sort of area, there's 2 zones in there, sort of 16,000 to 15.6 and then 15.6 lower. The 15.6 is my favourite zone. It looks really good to me, but I do think something like that could definitely happen. Am I expecting to see that this week? Not really. I'd kind of want to see another bounce, even not a full retracement up to there, but some sort of a come down, get more people buying off this level and then run it down, get that spring. But that's a big if, who knows if that's going to happen. But really on the daily, that's kind of what I'm seeing. We still haven't gone anywhere near the fib levels in terms of the 38 and anything higher. The trend line is a long way from price. So it is really this supply zone holding price, and then, you know, the demand zones below. Currently the weekly is probably stronger than the dailies, or more relevant, because the dailies to me are a little bit lower. If you draw this zone a bit differently, there's something I noticed this morning when I was talking to a friend. I drew that zone, as I always draw my zones, based on the body, so the wick of this candle to the body of that, the top of the body of that doji, so it probably even should be a little bit tighter. If you draw it to the top of the wick, it's actually been basically perfectly respected. So, you know, you don't want to go changing your habits based on one bit of data, right? Because a lot of the time I find mine are respectable, I use the bodies, but it was just interesting to note that. Because I'd been considering that zone as being front run, but who knows, maybe I'm drawing that zone wrong. It's not enough for me to change the way I draw zones, because I still do think that I see the bodies get respected quite well normally. But just something interesting to note there. So that's what I'm seeing on the daily. Let's take a look at the 4 hour. And on the 4 hour, we have a trade that I really like the look of. So I marked this zone off a couple of days ago on my own charts, and was planning on talking about it in the call today, but it's literally being touched as we speak. So I really want to get this trade on. Now, I'll run you guys through why first, because even when I looked at this and went, oh, this trade's happening, I want to get it on, I went, well, let's just step through. Let's make sure that it's actually that, you know, that the setup is actually there, because that sort of helps prevent you from just FOMOing into trades and then later going, oh, I should not have been in that trade in the first place. I still try and rationally step through, okay, what's actually happening? Why do I want to get into this trade? And then if I still want to get into that trade, then I'll set it up. So what I am seeing is, let me get rid of the big fibs because they're going to just make things a little bit messy, is we formed this supply zone, this demand zone, and had a really strong move out of it, right? Huge buy up, formed a higher high. We broke these highs here, which was great to see. That is a good sign for the bulls on the 4 hour. For the first time in a long time, I am seeing things that I like for the bulls on the 4 hour. Still not very bullish. My daily bias is still bearish, but good sign. Things might be starting to change. The other thing I really like here is we have the 50 fib. You know, it is a little bit higher than the zone. It's not, you know, perfectly lined up, but it is in that region. We have a really strong EQ level. We have this trend line, right, which is a bit of a line of best fit. Not so much a candle close trend line, which is what I draw on the line chart. So the line chart uses candle closes. So when I'm drawing on the line chart, that is a candle close trend line. But in this case, I've gone for more of a line of best fit. Reason for that is essentially this week here. If I use the closes, it's a really shallow trend line. And it's... How do I explain that one? Kind of want to say gut instinct says do it that way, which is not really what you should be relying on in your trading. Not something you should write off completely either. But yeah, just something is saying to me, hey, line of best fit makes more sense here than a line chart does. Sorry, I can't articulate that better. Now, I was talking to a friend this morning about how the more traders seeing certain things, the higher your chance of success. So that's why when I say, hey, there's this, you know, there's the fib, there's the EQ, there's the supply zone, there's the trend line, why that makes me excited. Because you might only be a fib trader and you might only be an EQ trader. But if you are seeing a reason to buy here, that's one more person potentially buying here. That's potentially more buying pressure. And trading kind of becomes a self-fulfilling prophecy in that regard. If everyone is buying here, price gets here, all that buying pressure pushes price back up. You do, you know, that's kind of like the first level, and then you also get into the institutions who look for that and then run price down to hit your stops, which is what I was speaking about on the daily. But both things, you know, are worth considering. And right now, I do really like the look of buying off this zone. What worries me is I've missed that bounce, right? I really like to get the first touch of the zone, and now that's already happened. We might not get back down there. So what I'm going to do is set up a trade that enters immediately. So I'll step you guys through that. So first thing, as always, is I need my trigger. We can put it there. It kind of doesn't really matter. It just has to be below price. Then I'm going to add my trade. So I want a live trade. I'm going to go long. And the important thing here is I'm going to go for a cross. So if you set up a cross long with no conditions and price is above your trigger, then we'll automatically enter that once you submit that trade. If you set up a cross short and price is below your trigger, then we'll enter that once you submit that trade. One of the other things I'm going to do here, is have my stop loss a little bit tighter because I have seen the bounce that I wanted to see. So usually I use the entire zone because I haven't seen that bounce yet. So I'm not sure where in the zone price is going to get to before it bounces. In this case, I've seen that bounce come. If we now start coming down into this zone, I'm going to be a lot less keen on that. Most of my good trades are the ones where price only touches that zone once and then bounces off strongly. So I could even put my stop loss right under the wick. That's often where I'll move my stop loss to once I see that bounce has happened. But in this case, just with that EQ there and sort of this wick here, I'm just going to give it a little bit more breathing room, but I'm not going to use the entire zone. So even though I have sort of missed as good of an entry as I usually like to get, I can also alter my risk to reward because I can reduce my stop loss. So it kind of balances out really nicely there. In terms of targets, I'm going to target this supply zone here. Now, typically I would draw that to include that wick in terms of where I'd actually consider that zone, but it's useless putting that wick there for me. It's just way too big of a zone. I'm not using it for a stop loss. I really only care about the bottom of that zone because I'm using it for a target. So I'm just going to draw it that way. And I also want to keep an eye on this zone here because we might get there and then reject, especially if I run fibs on that. Potentially they both line up with zones. So yeah, 38 and the 50 sort of line up there. So actual take profit is going to be 21,548 at this zone, which is also a pretty strong resistance level now that I look at that. I'm happy to leave it where it is, but it's another thing where I'd be like, I'll keep an eye on it there. If we're sort of wicking off this EQ and not getting up there, I might just close that trade out. This zone here, just want to keep an eye on things if we do get there. So then I have to come to risk management. Now, because it's a long and my bias is bearish, my daily bias, I always drop my account risk percent. So I'm going to go with 0.5 on that. The minimum risk reward, I'm happy to leave as 2 to 1, and then I'm going to use fixed values for those two. So we have a 7.57 to 1 risk reward. That's based off alpha where it is currently, so that will change a little bit. In fact, we can check what that will be. So today I am very happy. Been talking to a friend for most of the morning, so that was really nice. Confidence is a 6. I do not love these trades. I don't take them very often. Usually if I'll be like, oh, I'll just miss that trade. You know, I'm not getting my entry there. But seeing, now I really want to get in. Seeing that has made me really want to get in. In fact, what I will do is I will add this. I will submit it. And then we'll come back. So this, if you want an immediate entry, right, you just want to get in. Well, I've done my risk management. I've done my entries. I've done my exits. Now you'll see what happens is that goes to the dashboard and sits as a monitoring trade. But if we wait, I think it's about 10 seconds. So VEMA does monitoring runs every sort of 10, 15 seconds. You can see VEMA has just entered that position for me. Now, if your entry is hit, for other reasons, VEMA will act on that faster. It doesn't have to wait that 10 seconds. But on your first one, when you first submit that trade, it sort of takes 10, 15 seconds before VEMA puts it into its log, before it starts sort of paying attention to that trade. So we are now in this trade. So we essentially got an immediate entry there. Now the great thing is, now that we have made it so that you can edit your tags, I can then come in and put in my tags and put in my comments. So even though I haven't journaled them when I set up the trade, I've got into this trade because I really wanted to get in fast. It looked like the bounce was happening and I didn't want to wait until, price was potentially a lot higher. And now I can just go back and put in my journal. So you do have to do your mood and your confidence before you submit. You can't change them once they're there, but your tags and your comments you can add. So what I am seeing is a demand zone. In fact, let's start from the top. So we had weekly and daily bias bearish. Then we have our demand zone. We have the 50 fib. Gib, 50 fib. And we also have the trend line and the EQ. But it is counter trend trading because it is against my high time frame bias. And so those are kind of the key notes here. In terms of what I'm going to tag, I had less than 8 hours sleep. So I slept, I think less than 6 last night. I don't know if I have a less than 6 hours sleep tag. No. So we'll just go with the less than 8 hours. Then we have fibs, 50 fib. We have EQ. For our EQ, daily bias is bearish still, which means that we are going against the high time frame bias. We've got our EQ, we've got our demand zone. For our demand zone and a trend line. 4-hour trend line. So those are the tags I'm going to add. So you can see that if you didn't have to talk people through your trade setup, you can actually get that entry on really quickly, right? Because you just come to VEMA and you just go, here's my trigger, here's my stop loss, here's my take profit, here's my account risk percent, done. And then VEMA will enter it for you on its next monitoring run. So, you know, it might take 30 seconds from start until you've got that entry. So it is quite quick. We are building an actual immediate entry feature, so that will be a great addition. But if you want to use immediate entries currently, this is a great way to do it. Use the cross strategy, and if you're going for longs, just put your trigger below price. If you're going for shorts, put your trigger above price. And then you can come back and just clean up your journal later. So you can still collect that data, which is always really, really important. But it means that VEMA will handle the risk management and those things for you. So it's actually a lot faster than, you know, typical immediate entries where you would still have to do your calculations on position size and things, and then go to the exchange and then do all that. That would take me a lot longer than 30 seconds. So it's great to have this option in VEMA, even if it is an indirect way of getting that immediate entry. So that's it. That's it for me for today. Hopefully this trade goes well. You know, I am quite liking the look of this buy up, so it'd be good to see a bounce from here. But yeah, apart from that, hopefully you guys are shredding the markets. Hopefully you're all printing money. Hopefully you enjoyed that little demo on how to do these sort of immediate entry trades. Have a great day, happy trading, and I will talk to you very soon.